journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, so this is the NASDAQ, as you can see over the last month or so. And we had a big sell pattern up here, remember, at 23,772. We came all the way down here. Then we rallied up. I want you to see the symmetry here, folks. From that high to that low was exactly 382. Okay, and guess what that one was? That was also 382. And you can see we still are going higher. The key to this failing is right here, from this high to this low. You can see where we are right now. I want to show you the action, though. The action today is what's exciting. If we get above here, if we get above 23, another 150 pips here, that means this whole scenario is bearish. Right now, it's still got a chance, but boy, it's with the Chance brothers coming over the hill, folks. Slim and none. It doesn't look very good, but I want you to see the action this morning because that's what was exciting. This was really quite exciting. Look at these swings that we had, folks. This is today. Look at this. Up, down, up, down. These are monster swings. You go up, you rallied up 150, you drop 200, you rally 150, and look where you're going right now. I mean, it's just unbelievable that we're having these kind of swings, but maybe that's how it's supposed to be, but we'll have to wait and see. But anyway, it does look like it's got a slight chance, but again, I said slight, and the key to it is if we get much above that 20 in the S&P, we're close there right now. We're banging on the door. We start getting above the 64.95, then I think that tells us that, well, we better look at something else because that's a perfect 382 right here. Another perfect 382 here this morning, and you can see where we're going, and you can't stand in front of it, folks. So you just take your pedal to the metal and let it ride and see what happens. Okay. Now, we had another one that we were watching very closely this morning. That was the crude oil. By the way, we did take a small loss in the soybean position. It's now back to almost what we paid for it, but our goal was to not lose more than $300, and that's what happened. But here is the crude oil. Let's get the hourly up because that's what we were focusing on, as I recall. And you'll see there's where we were. There was our target right here, folks, 10 pips off of where it was supposed to hit, almost exactly. And so I suggested take a close look at this because you can see what's happened this morning. If you'd been following the things that we look at, like buying the first 382 retracement, you would have had a really good chance to do it either here or here. There was your ABCD to the downside. There's your up move. You buy the first retracement. If you miss that, you could come right back in and do the second one. There it is right there at the 382, and it's starting to work. And that's all we're trying to do is to limit our losses and increase our profits by using some of these little patterns that we have. They don't always work, but, they work most of the time. And the key to that is most of the time because it doesn't work all the time. Okay, now let's talk a little bit about that gold market. And hold on one second. We'll get over here and show you where we are. By the way, folks, we do have a mystery guest today, someone who's been very bullish for a long time. You'll never guess who it is. Yes, you're correct. It's Stan Harley. Okay, here was the action in the gold yesterday when we had the big high. There's your 382 retracement, came down. Now we went up to the 61% retracement and came all the way back down. And of course, this is not looking bearish, folks. Let me show you why. The pullback was right at the 50% level, okay? It's still acting like it wants to go higher. If this were really bearish, it would have come up to right here and then stopped and then backed off, and it didn't do that. So it's holding against the 61% level. But frankly, folks, if it gets above here, it can go a long way. So my assumption is wait and see for the clear pattern, and that's really what we're trying to look at today. So It's just picking the ones that you think are going to work, but you just don't know which ones are going to work. That's where the problem really is a little squirrely. Now we're going to recap something just from a kicks and giggles from just a few weeks ago, days ago, and that is the live cattle market. We were following that. You can see today we made a perfect ABCD down to this level right here. If you watch the intraday action, you had the A, B, C. We'll just draw it in so you can see it together. Get rid of that other one because we already know what that one is. And we'll put the other one in right here. And you'll see that we just had a really nice one form. And been a good place we wanted to buy cattle. That was the place to buy it, was right here. But it missed it by just a little bit. But the other one was right here, the perfect one. This was with the intraday from all day. Shucks. All of today's action. There's the high of the day. Then you come down and you make this A, B, C, D pattern, and then you have the 382 retracement, and that yields you to the bottom. There's your AB leg, there's your CD leg right there, and there it is, right there, almost right on the low. And now we're having a little bit of rally coming in on that. But I'm still very bearish cattle, but we should get a little rally here the next day or two, hopefully with ABCD format, and be able to get us short. All righty, now let's move on to, hold on, let's cover the short show being. Wow. Sorry, folks, bear with me here a second. Let's get the soybeans up because this is the daily chart. We bought these at 31. I had to stop right there. I didn't want to risk more than $300. It went to the 50% level. It was still underwater from where we would have bought it, but I didn't want to risk more than $300. It should have stopped right there, and it didn't. It broke last night and took us out, went to there, and now it's within 3 cents of where we do it. So I can't do anything here. This pattern is broken, and it's exceeded the ABCD pattern by quite a bit. So I have to wait and see what the next trade happens to be. That's how I plan it, because I know some of them are going to work and some of them aren't going to work, and that's all I'm trying to do is find the ones that work the best. Now, I've had a couple questions about Google, so let me try to re-inform you. Yesterday we had a monster ABCD on this on the long-term weekly at the 230 level, and well, it's actually down a little bit from that level right now because there it is. We were talking about it yesterday. 231 was the expected high. The high was 231.8. It's only $3 lower than that right now, but look at the relationships. This is weekly. You see how the 1.35 relationship managed that high, and there's the 134 managing this high. It's a strong probability that could be it in Google. Anything above 233, I would say Nebahachi. I mean, it's not going to happen. Anyway, that's what we're watching. By the way, Stan Harley will be our guest in about half an hour or 15 minutes, and he's always got some stuff working for us. Now, let me show another big disappointment that I have, and that is evidently we just found out off all the major news services that everybody is going to stop eating pasta, cookies, and bread, because you can see here my assumption of going long the, there it is right here. Just get this out of the way. That's a weekly. I want to get the daily up. Hold on a second. I better look at that weekly. Here's the daily. See, we made a new low, so I'm out of that with a 6 cent loss and wait and see what the next pattern's going to be. So we'll be right back. Stay tuned.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV. live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Okay, folks, this is Tesla. There's really not much going on here. We've been in this tight trading range here between 345 to 325 for several days. Doesn't change. It's still an uptrend. As you can see, we've had higher bottoms and higher tops. That defines that. Okay, now I want to switch over and talk about the U.S. dollar because we're having lots of movement in gold and a lot of other things, and the dollar usually precedes some of that stuff. So we'll get the dollar index up here, and we're going to take a quick look at it. I think this is going to be here on the daily. It looks like it is. Let's just double check here. Nope, that's the weekly. Let's get the daily up, and we'll see it. There it is. And you see it's been in this tight trading range, and it hasn't changed anything. It's been here for a solid, it's been here for almost a month. Yeah, it's been here for a month. So there's where we are. I personally believe that it's got a possibility to go higher. That's mine, because this is a very strong consolidation. Looks like it wants to go higher to me. The best way to find that out is to go look at what 53% of the dollar index happens to be, which is the euro. So we're going to pull the euro up, and I'll show you why I think the euro has a chance to go down, i.e. that the dollar has a chance to go up. So here's the euro. Okay, and you can see we just had all of this action right up here. This is the opposite of what we were sawing here. Now you can, sorry, just a second. I have to refresh this for just a second here. There we go. See, we've hit it 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times. We've been up at that 78% level and can't get through it. Now we're starting to move lower. That means the dollar looks like it's starting to move higher. Now, if the dollar starts to move higher, that usually means that gold will back off a little bit. But again, the key word there is usually. It doesn't always do that. The one that looks the most bearish of the group is the British pound. Let's get the daily up on this one right here. And as you can see, it's also gone up to that level, but it can't even go back to those high levels right here. Let me refresh this, and we'll be right there. Okay, there's what we've had so far. You can see we've had this little move down, and then all we've had today was a little tiny rally. It looks like it's about a 61% retracement of that previous move. Boy, it's very small, that's for sure. There's really not much here. You can see the ABCDs, but not really much happening here with the British pound. And the last one that we always follow is the Japanese yen versus the US dollar. And we'll get this up here and show you where we are right now. And you can see that's been in a really, really tight range here for almost a month now. And I think it's got a bullish bias to it, folks. I really do. You can see here the pullback on the whole thing here looks like it was just about exactly at 382. Look at this. How many times we've hit the 382 and haven't gone below that? That is not bearish. Now, below it is bearish, but that's not bearish right now. That looks to me like it's really strong support and getting ready to pop out to the upside. So keep a close eye on that. You got to get above the 150 level for that to be a big breakout, but that's the one you want to be watching. Okay, now we've had a question about corn. And, of course, wheat has gone down even farther than we ever thought it could. Some people thought it because they were short. Okay, here is the Christmas corn. We've had a pretty big move up. Now, we still have a target that we're looking at right here. The action today was, you can see we were down a little bit earlier, then the market snapped back. Now, from the high to the low, you'll see it stopped just about exactly at the 50% level, so it's still acting bullish, heading towards this target up here of 429. Then that would complete that. We'll just draw that in so you'll be able to see it without too much trouble, and that's what I'm trying to do, is to line these up. Folks, this is the first time in my trading career for the last 5 days I have not seen a television set. I'm visiting with some friends, and they don't have a TV, and I have to live through it, but it's actually a good thing because I get to do other things. But anyway, this is what it looks like in the corn to get up to this 427 level, and that's a pretty big run here. That's about 35 cents in corn, which is a pretty big move to the upside. Okay, so we've covered the corn, we've covered the Japanese yen, and we've covered the euro, and we covered the British pound. And we covered that one. And I think what we want to do now is we got the dollar index out of the way, and we've already covered the dollar index. That's the long-term weekly. It still looks friendly on a weekly basis. So that's Tesla, and we got that done. And so that's what we're watching here right now. We're just making new highs again here, folks. In the Dow Jones, you can see we're busting through the 786 or 618 by quite a bit, and there was your 382 this morning here in the Dow Jones. Also, there it is this morning. There's your high. I was watching it happen, and I said, "My God, the Nasdaq hit it, the S&P hit it, and the New York Nasdaq hit it." The Dow Jones hit it, and the S&P hit the exact 382, and you can see it exploded to the upside. It's very, very powerful indicator, folks. So that's one of the things you want to, when you're watching these things, is to try to get them to line up so that they fit pretty nicely, and then you'll see that to give you a little bit of edge, because, boy, it's a powerful signal in what we call strong trending markets, Larry. Try it again. Strong trending markets. All right. Okay, now here we have the gold is backing off a little bit from that high, right up again, hits the 618 again, so not too much there. Still a strong probability that might be the major high, folks. The reasoning for that is, if you remember yesterday, we were watching this right there. There was the big ABCD at that level, and then the 1.618 expansion was at 645. We got to 640 and a quarter. And we backed off all the way down, dropped $70 to 35.74, then up to the 618. Nothing bearish about this yet, but if we start getting below here, that means we got more of a correction coming, and then there could be more to the downside. But right now, this is strong resistance up here at 316. Okay, now let's move on and cover something here in the coffee. Someone asked boy, no one's ever asked a coffee. Wow, I wonder who that is. Hold on a second here. Coffee is this one right here. It had been very, very bullish. Let's see what happened here. Yep, it's still bullish. It's still acting pretty good. This is the coffee on the daily. The target was here. We didn't quite get to that level. We had that perfect Gartley right there. There was a beautiful Gartley right there on August. You can draw it in and see it for ourselves. There's your X, A, B, C, D coming in, right at the 786, and away it goes. So, and here's where we are now, is we're back up against the 78% level in coffee. And we're actually above the 78% level. I can see that just by eyeballing it. Oh, we're exactly at it. Good shot, Larry. Maybe you ought to look at this stuff a little more closely. There's your 78% level, but it's nice consolidation up here, so nothing bearish about this yet, because it's holding up. We've done 1, 2, 3, 4 days, and it hasn't backed off hardly anything. 12 cents is not 9 cents is nothing in coffee, the market anymore. I don't know how people buy this Starbucks stuff for, $9 a cup or something in New York, I heard the other day. So, all right, that's coffee out of the way. And also, we've got a question about the silver. And then we got our main man coming up who really knows this stock market stuff. And that is Stan Harley. Let's get the silver up because it's probably heading towards $45. Let's hopefully I can find it here. And I'll bring this up, and Stan will be with us in just a second, folks. I'll put this...
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors. This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, folks, Stan Harley's going to be tied up for a bit for technical reasons. He's not in his office, but he's going to try to connect. This is the S&P over the last 5 or 6 days. Had that big break onto the second. You know, the one over the weekend, we expected that. That was a huge profit. There was 120 points down in the S&P. And, you know, I suggested you got to take something here because you don't get that much that often. And what I suggested was to sell the 382 on the way back, and you would have been stopped out of that one. Now, as of today, you can see yesterday's 382 was telling you something that was really big going to happen, and went exactly to the 382. And then this morning, on right after the opening, it did exactly the same thing right at the 382. And, you know, frankly, I wanted to sell it there, but I didn't. I was going to wait to where we are right now, right at the 78% level. But frankly, there's so much strength in the market that I'm a little timid. However, I just hit the sell button and I sold it at 64.89. And when I put a stop at 64.99, I'm only going to risk 10 points on this, okay? And that's all I'm doing. I don't have an ACD here or anything. All I have is this 78% level right here, and it's hit it, and we're going to see if that's going to keep it. But I don't know whether it is or not. The NASDAQ, as you can see here, is still going higher. And if you look at that, let's get the longer time frame on so we can see where we are here with the NASDAQ. It's done the same thing, except that we do have a small ABCD here in the NASDAQ today. That's the high. That's the low. So let's see how close we are to that one. See, there was your 382 coming in again. Same thing. Watch this. It's just truly amazing how 382 really I owe Tom Hugard a monster favor for showing me this one 6 years ago. But there's your 382. Now we've broken to the upside right here. However, when you look at this on the longer term, it's actually weaker than the S&P because it's not even near the 78. That's another 180 points, 180 points from where we are right now. So if there's anything that's going to stop it right here, folks, it's out of my thought process. So I just put the order in on the S&P and I'm risking 8 points. If it works, fine. If it doesn't, I move on and, you know, find something else. That's what I'm trying to do each time I do these things. Let's step back here. I'm not going to give up on this because people are not going to stop eating. I know I keep struggling with it, but by gosh, I do that a lot. Here's where we are in the wheat right now with these last few days. I'm going to go down to the smaller time frame. Okay, now here's where we are. And this is what we've done here over the last few days. Now, I bought this at 25. Okay, it got up to 35. I didn't get out of it. And then I did get stopped out here at 17. Okay, so I'm out at 17. I'm going to wait and see where I can get back in it because I don't believe that people are going to stop eating. Folks, this stuff 3 years ago was $13 and everybody wanted it. Now it's $5 and nobody wants it. But I have to wait and see. And so far it's not working. So my next process is I have to wait to see what the next pattern brings me. We've made new lows. That there's a high probability that we can come down one more time and get one more move. And that's another 10 cents lower. That would be okay. Now, if we get to that one, I'm going to try it again right here at 10 cents at 5.10. I'll become a farmer at 5.10, just like I did here at 5.25. Could have got out at 35, ended up with a loss, but you got to keep working with your plan, folks, because it'll get you on the side that you're supposed to be if you do what you're supposed to do. Because these numbers work. They don't work all the time, but they do work. And therein lies the rub, okay? So that's what I'm looking at in the wheat. Nothing to do yet, but soon. And believe me, folks, soon is going to be Monday, because we have a full lunar eclipse on Monday, the 7th, okay? That means that, boy, that's going to be exciting for the grain, especially if they sell off quite a bit into that. And then the second part is that on the 22nd, which is the equinox, that's when we have the partial solar eclipse. And it's also the changing of the seasons. We're going to go from summer to fall, and it's going to be quite exciting to see this thing jump around at this point. Probably same. Well, the stock market's going to be exciting no matter what. So that's it. Okay, let's move on here for just a second here, and I want to go through one of these things at a time here to make sure I don't miss anything. And since I just put a trade on, where did it go? Okay, here it is right here. I sold it at 89, and that's where it's trading right now. I sold it at 89, and my stop is 94.98. 94.98. Okay, 10 cents is what I'm risking. I sold it right there at 99. And the only reason I did that is that number right there. That gives me enough confidence that it works most of the time. And I think we might have our man in the house. Hold on a second. And we have Mr. Stan Harley in the house right now. Welcome, my friend. Welcome, welcome. How are you?
Mr. Pesavento. Hello, hello, hello. I apologize for the technical delay. I'm away from home in a hotel room on a laptop, and the Skype Teams interface wasn't totally set up on my laptop, but we're connected.
Okay, tell us. All I can hear is one word from Stan Harley, and that's higher, higher, higher. How much higher?
Well, I think Dow 50,000 is not if, but when.
Okay.
That's what I think, Larry. It's a coming. Brought a handful of charts today. I thought we'd cover stocks and maybe a little Bitcoin and maybe a little unemployment. First of all, let's take a look at the stock market. This is my continuing theme. This is a chart going back to the late 90s. And what I've shown here is what I call the primary monthly cycle. And that cycle is an accordion. It contracts and expands, but nominally it spans about 49 months. Call that 4 years. Sometimes it contracts by a Fibonacci 0.618 to 30 months. Sometimes it expands by a Fibonacci 1.618 to about 80 months. And you can see there on the screen, all three cycles I just described are right there in front of you. And there's the math. It's all related to the Fibonacci series. And I'm theorizing the next low will occur 49 months from April the 7th, 2025, plus or minus. So that would suggest the next low in the vicinity of May, June of 2029. And here we are, late 2025. Now, the other thing to take note of, and this is something that I call right and left translation. Take note of the peaks on the way up here. Each cycle on the way up has seen the crest or the high point occur to the right of the middle of the cycle. Notice here it was to the right of the middle. Here it's to the right of the middle. Here to the right of the middle. That's known as right translation. And that's characteristic of bull market structure. Oh, we got the music. We'll pick it up.
Got to pay a few bills. We'll be right back with Stan Harley, folks. Don't miss it. Stay tuned. He'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, folks, back with Stan Harley. Please continue, my friend.
Larry, still looking at this chart, right translation all the way up in the primary monthly cycle series. And until we see left translation, which we have not yet seen, we're still in a bull market. What I think is likely to occur is this thing is going to top out first quarter of next year, and then we will have left translation for the first time in a very long time, and that will be indicative of a major sea change. And then we might be dealing with a more significant high, but we've got lots of time to worry about that. For the near term, take a look at this. This is a chart of the Dow Jones Industrials. I ran this off just a little while ago, and I've got a horizontal line drawn across Dow 45,000. And notice, since December of last year, we made 3 initial stabs at Dow 45,000, and we could not punch through. And W.D. Gann, about 100 years ago, theorized that the fourth push against overhead resistance was what he called make or break time. If the market failed to punch through, it would turn down, and it would turn down sharply, and that would be the end of the move. On the other hand, if it broke through on the upside, the breakthrough would be violent to the upside, and I believe that's what's occurring now. As you can see, we just recently, on the 4th attempt at Dow 45,000, we broke through. We pulled back for a couple days to essentially retest that breakout point, and now we're going higher.
Well, sure,
Big
nice
event coming
chart.
tomorrow. Big event coming tomorrow, by the way, tomorrow morning. We'll discuss that here in a moment. Here's the S&P 500. Up there at 6,500. I mean, I have a hard time even saying these numbers. They're so stratospheric, but hey, this thing ain't over with yet. I think the Dow is going to 50,000 plus in the not too distant future. And when we ultimately top out first quarter next year, that's my theory for the moment, I think you're going to see the Dow in the low 50s.
Okay.
Here is the broadest measure of market activity. This is the New York Stock Exchange Composite Index, the NYA. And as you can see, just a couple of days ago, it too went to a new all-time high. So some pundits will argue that the market is being kept aloft by a few high-tech winners. That's just a false statement. That's completely false. Look at the New York Composite Index. This is all of the stocks on the NYSE. They're making an all-time high. So it's a fairly broad-based bull market express, as I like to call it. All right, we'll spend a couple of minutes on this. This is kind of my secret template here, if you will. This is a chart of the S&P cash index going back about 8 months. And what I've done here is I have denoted all of the highs that occurred since the April 7th low. Now, one phenomenon that I've noticed, Larry, over time is that cycles, if there is a spike low and then there's a subsequent retest, the follow-on lows are cycles that spin out from the retest low. On the other hand, the highs that occur following that spike low tend to be a Fibonacci template of the spike low itself, not the retest. I hope that's not confusing. This chart will illustrate that. Notice the low we had on April the 7th, and each of the highs on the way up. We had one on May the 2nd. We had one on May the 19th. We had another one on June 11th. We had another one on July 31st, and then one on August 28th. Each one of those, when I plug those into a spreadsheet, aligns pristinely with the major Fibonacci ratios of 0.146, 0.236, 0.382, 0.618. The most recent one was 0.764. That was the high on October 28th. And then if Stan's theory pans out true to form, we should be looking at the Fibonacci ratio of 0.854 and 1.00. And what does that align with? Well, 0.854 aligns with September the 12th, which is a week and a half from now. And the 1.00 function in this time series function aligns with October the 9th, as you can see. So I'm thinking we're going to chop around. We're going to head higher. We got some unemployment data coming out tomorrow. I don't know what the numbers are going to be, but I believe, based on looking at the chart, that it's going to have a bullish outcome for the markets, and the market's going to rocket higher, and you're going to see all of the popular averages in record high territory this time tomorrow. And then I think we're going to keep going up for about another week, and then somewhere in the vicinity of September the 12th, with a standard deviation of 1.86 trading days, round that off to 2. So essentially September the 12th plus or minus about 2 trading days, we should see the next high. Then we'll back off for a few days, and then I think we'll chug-a-lug higher from there, ultimately topping out around October the 9th, plus or minus about 2, maybe 3 trading days. And that should be the high in what I call the primary weekly cycle. That primary weekly cycle, different from the primary monthly cycle. The primary weekly cycle is about 8 months, bottom to bottom. That's about 161 trading days. I'm looking for that to top out around October the 9th, as this spreadsheet reflects, and then head down for about 34 Fibonacci trading days, bottoming around Thanksgiving, and then higher from there. We'll get into that in a few more weeks. But in the near term, I think we're going to see a rocket ship ride higher after tomorrow's unemployment data comes out, higher into the 12th, back off for a few days, then higher again into the 9th of October.
Wow. Looks certain, make good case for it, my friend. How about Bitcoin?
That's what the data suggests. That's what the data tells me, Larry. And if things change, well, then I better get on board with the change and give my Etch-a-Sketch a good shake, and start over. But that's how it looks right now, based on the data thus far. Could the data change? Well, of course it could, but I only have what I have right now, and that's what the data is telling me. Bitcoin.
Okay.
You and I have discussed this on the air a number of times. This is a log chart to make it more easily readable. And what I have noticed is that the major peaks in Bitcoin can be defined by the Lucas series. And the Lucas numbers 18, 29, 47, 76, 123, and so on. Look at the highs. Look at the high-to-high function. These are time counts in months. 29 months. That's a Lucas number. The next one, high-to-high, was just 2 months over 47 months. That's a Lucas number. The next pair of highs occurred exactly 47 months apart. And I was theorizing that the high that I think probably has occurred would occur in the vicinity of 47 months. But notice how this one over here expanded by 2. So that would suggest this one would contract by 2. So 47 months from the November 21 high would align with October of 2025. But if you go 45 months from that high, it aligns with August of 2025. And so far, the high occurred in August of 2025. So I think alongside holders of Bitcoin here could be a little bit sad face for a while, because I think we're gonna hunker down here. We're gonna be back below 100,000. Now I hear the music. Time to pay some bills.
Got to pay some bills. Stan Harley, be right back, folks. Stay with us, please.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years, with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back with Stan Harley, folks. Please continue, Stan.
Larry, we've got a big government report out due 8:30 a.m. Eastern time tomorrow that a lot of folks are going to be watching, the unemployment figure for August. And I thought it might be interesting to the viewers to just take a look at what unemployment has done and where it's going. Here is a chart of all of the monthly unemployment data points as reported by the BLS since 1948. So each red square there on the screen represents a monthly plot of unemployment. And what I've done here is I have inverted it. which is a little bit different from the way most people look at it. But by inverting it, it looks more like a stock chart. So when the dots are heading down, it means going into a recession. When the dots are heading higher, it means recovery period. So it looks more like a stock chart. For me, it's a little easier to read. And what I've noticed is major troughs, major recession troughs, as evidenced by the unemployment data, are very, very cyclical. Take a look at this. This low here, this low here, this low here, this one, this one, this one, this one, this one. Look how regular they are. The fact is the economy is extraordinarily cyclical. But I guess folks at the BLS and the Fed are not aware of this. They're probably not students of market cycles. But clearly there is a cycle here. I find it's about 128 to 129 months. That's about 11 years from trough to trough. So we tend to get major recessionary lows about every 11 years, plus or minus. And that's a pretty as you can see, it's a very regular heartbeat. It contracted one time by Fibonacci 0.618, right between here and here, and then it picked up the regular beat, and we're out of time.
Thank you, my pleasure. We'll have you on again soon. Stand on it, folks. Live every day in an attitude of gratitude and may God bless.